we've got assets, liabilities, and many home buyers and homeowners are really concerned with cash flow nowadays.
Yeah.
To give you an example, we may advise someone to put less money down. Let's say they wanted to do a 15-year fixed rate mortgage, put less money down, maybe do a 30, take the difference in what would have been that payment between the 15 and the 30, put it into a side fund and let it grow. 15 years from now, you would have wanted to have a free and clear house. We've got that side fund. If you wanted to, at the advice of your advisor, use that, pay it off, and then you've got all the extra interest that you've accumulated over the years of that asset growing.
So that's a great point, because we see clients a lot with this same situation. They'll say, Brandon, what should I do? And if rates don't dramatically differ, right? So every situation is different. But I say, well, it's nice to have the ability to have less of a payment required monthly. Maybe take a vacation with your family while your kids are young. So it gives you the flexibility, and you always have the choice to pay extra. Like no one's going to stop you from doing that. But I think you're then sitting in the driver's seat to say, well, I can pay extra if I want, but if I want to go on that vacation, I'm going to do it. Like, I think we're starting to see a shift in the mindset of memories matter just as much as money. If not more sometimes, right?
I would wholeheartedly agree with that. And that's why every plan has to take into consideration, an individual's personal and financial goals.
Well, and to that point, we've talked about situations where, this could make sense or this is a great idea, but it's not that case for everybody. Are there examples where you'd be like, hey, this is definitely kind of a no-go zone. I wouldn't recommend taking home equity out of your home in these scenarios. I mean, do you have any of those just quick off the...
I think discipline is a big factor when it comes to this. I do have someone who would like to have a home paid off in 15 years. And just after speaking with them, it may be a better option for them to go into a 15-year fixed rate loan, which forces them to make that payment. And it essentially forces them to reach their end goal of having their home paid off in 15 years.